Hey, everybody. Early birds. Liz, I see that you're on. Can you guys hear me okay? Yeah, thumbs up from somebody that you guys can hear me. All right.
Hey, Doug.
Thank you, Jason. Hey, you made it.
Yeah, I know, right?
All right, so I see Liz is on.
She may have just gotten the connection going. There, Liz. Good morning, Liz.
There she is. Up, you're muted, Liz.
That's how my husband likes me. Just kidding.
All right, now I'm trying to figure out how to get you to be a co-host here.
I might already be a co-host.
Oh, good.
I might.
Okay. Now someone logged in as like an admin because I didn't have to. So I'm looking at all the people on here and I don't see any. Okay, it says I'm the host now. So, okay. Can you share your, oh, did you do it, John?
Yeah, I got you.
Okay, thank you, sir. All right, well, we'll probably get started. I'll give you an intro, Liz, of course. We'll probably get started about 9:32. We'll give a couple minutes for folks to kind of filter on. And we will be also live streaming this on another link if we hit max capacity on this Zoom call, because we can only take 100 people.
Never spoken to 100 people before.
Oh, geez. It doesn't even feel like anything because it's all online.
Exactly.
It's just a number on the screen. If it was live, it'd be different. like it's like in person.
Yeah, actually I have. I'm just kidding.
Okay, good.
In my dreams, right? Yeah.
All right, so we've got hey, Andrew's on. What's up, man? All right, guys, we're gonna get started.
Thank you guys for having us. Really appreciate it.
Hey, yeah,
Morning,
us. Are there more people on there?
Well, I think the rest of the team's going to be joining in. Jarrell sent in the link to the group chat with everybody, so hopefully they all attend. It would definitely be in their best interest, so I'm rooting for them.
Sweet. Thanks, man. So we'll get started about 9:32. Everybody, I want to give a few minutes for everyone to get in. I'm glad that you guys are getting on early. I'm nervous about filling up the number of seats we have available here, but we'll see.
How far out was this class marketed?
Oh,
I mean, not distance, but like scope, like just California or like West Coast?
No,
should just be California for this one.
Well, so we are going to have some loan officers and perhaps some realtors from other states, but predominantly California, yes.
Okay, good.
And we're going to have a mix, realtors, loan officers. We like to cater to the realtors because this is like a mega loan lab for them. But if you got some insights for loan officers, too, drop them in there because we're going to have a lot of LOs on the call as well. Got a tie on today. I haven't worn a tie in a long time. This is a big day.
Hey, how was you guys just went to Disneyland, right, Doug?
We did.
You took your family to Disneyland? How was it?
Yeah,
Was it pretty packed?
It wasn't. I think they're limiting how many tickets they allow. So just for COVID stuff. So it works out great because
that's good.
And we were there like New Year's Eve. And so, I mean, I was nervous. And we were there from like Christmas break to New Year's. So everybody's off and I figured everybody would be going, but it wasn't bad. Huh? It wasn't bad. Cool. It was nice. I've seen it busier. So
that's cool.
It was nice. And New Year's Eve was kind of cool. About 7 o'clock, they brought in all these DJs and started just like, it's like a dance party.
That's cool.
my kids were rocking out. All right, guys, we'll get started. Just probably 2 more minutes. And then Liz, do you want to, you can share your screen, right? Or do you want to test that now?
Oh, let's just double check here.
Oh yeah, you're good.
Looks good. Okay.
You're in. Good.
I'm in.
Like to test this stuff, technology,
me
last
too.
minute.
Appreciate that.
All right.
You're going to have to explain the tie because there's something around your neck that nobody's ever seen before.
That's what I was just saying that, Ed, before you got here. I'm like, I haven't worn a tie in forever. This is great. I'm feeling good. I feel professional today.
Ready to go.
Not in my hoodie doing a training for everybody.
That's awesome.
Yeah, I figured it was appropriate, right? Bigger venue here potentially. Let me move this over just a little bit. All right, guys, we'll
Liz
get
and
started.
Jason, I wanted to say thanks for the correspondence yesterday. I really appreciate you guys getting in touch.
Yeah, thanks for reaching out. I appreciate that with some of the pre questions, or the possibilities of what could be happening. Yeah, I appreciate
Sure.
that.
Nice work, guys. Nice work. So Ed, I found out that we only have 100 seats. So if we hit 100, John's gonna live stream it on GoToMeet. It's hard to predict how many folks are gonna show up, but we may exceed that.
Do you want the loan officers to go to GoToMeeting if that happens, Doug?
No, I think all of our real estate business partners will get in. I think we're gonna get like the late stragglers that are gonna miss out, and those are gonna be our people probably. That's what I'm thinking, at least. I mean, we got plenty of room right now, so I'm not too concerned. We're about halfway there.
And I'll work the participants in the chat for you, unless you want to jump in as well too, Doug.
No, yeah. If you could handle that, I mean, I'll try to. Luckily, we have Liz presenting, so I'm not like having to talk the whole time.
all pressure is off.
But if you guys see a question in chat,
Yeah.
just interrupt me, seriously.
We'll do.
All right.
I think to make everybody's used to seeing Doug with a hoodie, Liz, so you may have to put a hoodie on right now.
Just so everyone feels more comfortable.
Yeah.
Everyone's all right, guys. So it's 9:32. Let's go ahead and kick this thing off. Guys, welcome to the Mega Loan Lab today, where we're going to be talking about some fun topics.
Doug, the problem we have a lot of realtors going to the GoToMeeting because that was what was on the flyer, including some of our loan officers. In fact, Sarah Fox just told me, and I actually sent out my realtors have the GoToMeeting website. Because that was
John,
what
are
was
you on?
That was what was on the flyer. And so that's what I sent them yesterday. So that's where a lot of realtors might be right now. I just realized this is a Zoom and not GoTo.
Yeah, we're streaming right now.
Perfect. So it's going on both links, Ruth.
Okay, I'll go over to GoTo then.
All right. Now you won't.
Thank
I
you.
don't think you'll be able to interact on the GoTo side.
That's fine.
But you can watch it.
Okay.
So thank you for letting us know, Ruth. But yes, this is streaming on 2 different platforms right now, which is nice because it might cut down our participants on this side. So again, welcome to Mega Loan Lab today. We try and do relevant topics that are going to help you guys be better realtors, be better loan officers. And today we have a special guest speaker who's going to be talking a little bit about how to work with solar liens. Solar liens are always one of those hiccups that if you don't get ahead of it, it ends up biting you at the end. And the differences between owning it and leasing it and the different paths there, it just all kinds of questions tend to come up, and more houses are getting solar. And so this is not something that's going away. It's something that's going to be a bigger part of what we do in this industry. And so mastering how to handle that scenario, and especially as a listing agent, getting in front of that problem potential, and working with the lender to make sure it's a smooth escrow is really important. And so Liz has a ton of experience as an escrow officer. She's currently a project manager and a marketing specialist, but she was most recently serving as a branch manager and escrow officer, of course, for Fidelity National Title, which is where I send all my refis. They're phenomenal. I use Miss Sherry, and she's great. And she worked as a branch manager in the El Dorado Hills branch. She was an escrow officer since 1993 and has been a branch manager specifically at Fidelity National Title since 1995. That's pretty impressive. You know, you see escrow officers switching, companies constantly. It seems like every couple of years, the escrow officer goes somewhere else. And the fact that Liz has been with Fidelity for so long speaks to her commitment to Fidelity and what they have to offer, as well as her expertise that she's going to bring to the table, having 30 years experience doing what she does. Now, the other topic we're going to be speaking, or she's going to be sharing about, aside from solar liens and leases, is also how to read the preliminary title report. We get it at the beginning of a transaction, and sometimes we're not looking through those carefully enough. And again, something comes up that bites us. And then inevitably, it's always, well, we sent it to you week 1. You had the preliminary title report. Why is this news? And I think a lot of times it's just because we're not taking the time to carefully review these things and work with the escrow officer from the get-go, because a lot of these things take time. And when it comes up on day 28 of a 30-day escrow, it ends up causing massive delays. So all that being said, I'm going to turn the time over to Liz. Liz, the floor is all yours.
Great, that's great. Thank you so much for having me. I'm Liz Tolan. I am a project manager with Fidelity National Title, and it's true, I was an escrow officer for a very long time. And now I get the pleasure of basically training and helping you close your transactions with a bit more information. I joke that I've been married for over 25 years, so I'm used to being interrupted. So if you have a question while I'm talking, seriously, I have no problem being interrupted in the middle of my conversation. I can pick it right back up. I'm used to it. So we're going to go ahead and first talk about solar liens. And these particular presentations are geared to pretty much everyone. The solar is actually, it has a little bit of information about loan officers and refinances, but it's mainly geared toward real estate. So we're going to talk about that first. So I'm going to go ahead and share my screen so you can all see the solar part. All right, so can everybody can see my the first page of my solar presentation? Thank you. Okay. All right, so we're going to talk about solar leases. And I as a consumer, being in escrow and seeing all the issues sometimes with solar, I never wanted to have solar. Well, last week I had solar put on my house. So I know way more about solar and the ins and outs of it than I could ever possibly want to share with you. But for me, it's a little bit more personal now. So I completely get it when people are a little bit flummoxed by it, but now it all makes sense. So here we go. So the idea behind this presentation is to help you avoid some headaches in the process. So I would say, again, as a consumer, I didn't have to sign anything. I own the house with my husband. I'm on title, but he did everything. I didn't have to sign a thing. So if someone says, I don't know if I have solar, could be like me because you never had to answer any questions at all or sign anything. So if someone passes away and the wife is on title and she doesn't know if there's solar, there might be solar. So anyway, the way that it happens is you either lease or you finance the solar panels. So at the end of the day, you would own them if you financed it. If you lease them, they're actually owned by the company. So regardless of that, it still is something that has to be dealt with in a transaction. So if you're a listing agent, you probably have asked that question when you sit down with them. You can often tell because you can see the solar panels. But if for some reason you don't see them, you should still ask the question. So the solar provider, say that I'm a seller, the solar providers had some documents signed and it had some information that got recorded on a preliminary title report. So the important thing about that for a seller and a buyer is that the seller has to agree to have it transferred to the buyer, most of the time if it's leased. If it's financed and going to be paid in full, that information has to be determined contractually. So you'd want to know that as a listing agent if it's going to be assumed or paid in full. What also happens as long as the contract is on the property, they also record a UCC filing. And UCC used to mainly be just for the Secretary of State, just acknowledging that something was recorded, but now we actually record it on the property. So you'll see not only the contract most of the time, but also UCC filing, acknowledging that there are items that are affixed to the property owned by someone other than the owner. So that financing statement is on there. If you are in Sacramento County, oftentimes you see something with SMUD. We're actually not going to talk about that at all because that's totally separate and different from the solar that we're talking about. We're talking about the major entities that do record solar. So before an escrow can close, the solar company has to be notified. So the following couple of pages of the presentation are great steps for you as a listing agent, maybe a loan officer, and as a selling agent. So the most important thing when you sit down with your seller and you know that they're solar is or if you're say you're doing a refinance and you know that they're solar, you should have your seller or your borrower contact the solar company and find out what the requirements are for transferring ownership or possibly doing a refinance. It's much easier to do a refinance now. We used to have everything subordinated. Now we just have an endorsement that if you're a loan officer, you know that an endorsement actually just takes care of keeping that on there. We don't have to have it released. It just stays on the property. However, if you are a listing agent, we want to make sure that we know exactly what is that solar information is about. I will say that there's probably a huge booklet that your seller has that you can determine whether or not it's a lease or an ownership even before you get the preliminary title report. So you'd want to have them call and find out how long it takes the company to go ahead and approve a lease transfer in the effect that they are leasing the panels. So the best case scenario is if you're working with a specific title company that you open a pre-sale with them. That way you know exactly what type of solar is on the property, and you know that way the seller and you can go ahead and talk about how to proceed with that particular solar information. So if there's a financing statement on there, I'll tell you from an escrow standpoint what happens. We put the information into the solar company's, basically their website, to put the information in for the transfer part. But that has to be done on the back end by the seller and the buyer. So we don't have any information about the seller's credit, their information with the solar company, and that information has to also be provided by the buyer. So we'll talk about that in a minute. But what we do on our end is we make sure that all that information is finalized and that we can get that UCC financing statement released for the time of our transaction. After we close the escrow, the solar company goes ahead and records it again on the property. So it's not that big of a deal for that, but we do need to have time in order to do that. So, okay, so we're going to talk about the next part is, so if it's a lien or a loan that was taken out. So in my case, I'm actually buying my panels. I'm going to own them soon. Woohoo. So you actually have to make sure what sort of financing you have with that solar company. So if the seller is going to pay it through the escrow, title needs to know to order a demand. So it would say that it's being paid probably on the contract, or if it's being assumed, it would say that it's being assumed by the buyer. So in that case, we're going to talk about what the buyer needs to do in a minute or two. So once you're in contract, you would want to, as a seller or as the listing agent, let the listing agent or let the seller know that they should contact the solar company and update them on the closing date and make sure they have the buyer's information. So when I was talking about possibly paying it off, this is the part where we're talking about the scenario of not necessarily a lease transfer, but of paying it through the escrow. So sometimes there's a bunch of scenarios that can happen. The seller can pay it in full through the transaction. The buyer can go ahead and basically assume it. And so that just transfers to the buyer and they pay it monthly as the seller was. Otherwise, it can just, if it's owned by the solar company and they're not being leased, then, I mean, they're not buying it, then it just transfers to the buyer. They sign all the documentation as far as how much the energy is going to cost. There's a whole bunch of other stuff you don't want to know about solar, but the buyer's going to want to see all that information so they know what their solar is costing and what their rebate may be at the end of the year. So we'll talk about solar easements again. That will be at the last part of this particular presentation. So what happens is they get recorded. So an easement is a right of way so that someone else can cross your property. So solar is probably recorded on your neighbor's property so that light and air can go to your solar panels. Super important if you have solar. So you want to make sure that if there's a solar easement, it's recorded correctly. Not all properties have solar easements. I would say maybe 50% of them do right now, but when you see that, it's just for the purpose of light and air. So if it's a refinance, you'll want to make sure that the UCC, if it's been filed, that we can get a termination. And then we will make sure that we get an endorsement for that solar. So if you're a loan officer, you just want to make sure you ask the cost of that. For Fidelity, it's $100. Okay, so you are the buyer's agent and you have a buyer who's interested in a piece of property that has solar on it. So you're going to, again, want to make sure you see the preliminary title report to make sure that the financing statement, that's at UCC, and the lease are mentioned and recorded. If not, that could be an issue down the line. The seller is going to have a copy of the solar lease that you want to see and get to your buyer so they know the terms. So like I said, I know way more than I needed to know like a month ago about solar, but you're going to want to make sure you know the lease terms for the buyer in the event that they're assuming it. And I would say that the loan officer is probably going to want to see the information as well. So they vary among solar companies. So you'll want to see the length, the monthly payment schedule, and then how you can eventually at the end pay it in full. So the lease terms are really important for both the buyer and if there's a loan involved for the new lender. So at this point in time, you're going to want to make sure that the solar company is notified that there is a transfer, so a purchase happening, and when exactly it's going to close. So the solar companies mainly do their, I would say, their paperwork transactions. They're based on the closing date of the transaction. So it's not really a first come, first serve kind of thing. It's a close of escrow. They actually work with people to get the documents in hand so that we can close on time. So the buyer, in the event that they're assuming it, is going to have an application and a credit check filed with the solar company. And I have seen that this is one of the things that kind of will hang people up in escrow. The buyer will get a notification and I don't know, for whatever reason, they're busy. They don't think it's important, but this can actually hold up escrow closing in a timely fashion if they don't do what they're supposed to do in time. So early approval for assuming the solar agreement is really important. So the preliminary title report should get to the lender. They can review it, make sure they see all the terms of the solar lease, so they know that everything is meets with their approval as far as loan to value ratio, et cetera. And again, the buyer will need to qualify to assume the solar agreement. So if there is a solar agreement in place, then the buyer does actually have to assume it. So like any other assumption of a loan, they have to qualify. So there may be a credit check involved that they would need to pay for, possibly upfront. So that would need to be handled as soon as possible.
Well, Liz, I was just going to kind of piggyback onto what you were saying, that it's so important, guys, when you're working with buyers and they have to get pre-approved for a solar thing. These buyers are getting emails from all over the place during an escrow transaction. And it's happened to me before where the application goes to their junk, or they got it 2 weeks ago and they never really responded. So it's really important as an agent and a loan officer that you are tracking this stuff, because the borrowers don't a lot of times. And if we wait until the underwriter catches it at the end, they're like, hey, I need that agreement. You're like, oh, geez, I forgot about that. And you talk to the buyer and they're like looking through their junk and they're like, oh yeah, 2.5 weeks ago, I did get that app. And that it takes time for them to get pre-approved. Just like getting pre-approved for a home loan, they got to get pre-approved for the new lease they're taking over or the new loan they're taking over. And so it's important that we inform our borrowers to be prepared and to watch out for this kind of stuff. Because if you don't, it goes to junk, it goes to the bottom. They're getting emails from escrow, they're getting emails from the listing agent, from the lender, and they're just bombarded with all of this traffic. And so we need to help guide our buyers to understand what's important and what's not, so that we're highlighting the important stuff.
Exactly. So I would say that one thing that does happen, excuse me, is that the buyers are going to get so many emails from other people that this may fall through the cracks. And from an escrow standpoint, it's not necessarily something that we know whether they got the email or if they responded to it. We only know when we call to check on the status. So if we call to check on the status and we find out that the buyer hasn't responded, we're going to go ahead and let their agent know. But sometimes it takes so long for the buyer to respond and go ahead and sign that one last little thing that it will maybe hold the escrow up a day or so. So it is super important. I know for this particular branch that we do check on solar as soon as we're aware of it, but sometimes other companies, they don't think that's a responsibility. So that may actually fall through the cracks. So again, if you're aware that there is solar on a property, I would say most of the time we see it on the contract when it's going to be assumed. So we know that we're looking for it on the prelim. We're also looking for the documentation to get transferred from the seller to the buyer. That's something we can follow up on, but we can't initiate or have anything to do with really. It's kind of out of our hands as a title company. We do want to make sure we get the UCC release so that we can close in a timely fashion. So we are involved. If the buyer is assuming that solar release, as I mentioned, not only they're going to have to be approved for it, but the new lender is going to want to see what the payments are. So we do need to make sure that we're on top of that, especially with that. So the terms need to be communicated probably initially with the listing agent and when the seller talk about it, so that it's something that the agent can make the buyer and the buyer's agent aware of once escrow is agreed upon. Because it may be something that's more expensive than anyone would want. So it's important that it's discussed. So for this particular, there's a couple of areas in Placer County, say in Roseville, and then in California statewide, there are a couple of solar items on there that are separate and different from what I was just talking about. So if you have a major company, say, Solar City, who's got the contract on there and it's got the UCC financing statement, that sort of information is what I talked about previously. There's two other types of solar items that you may see on a prelim and that the seller may be aware of that they have signed for that cannot be assumed unless it's a cash transaction. There's a solar lien that is, it's called Empower or Y Green or PACE loans. Those amounts are added into the tax bill. So when we close an escrow transaction, because it's included in the tax bill, it has to be paid in full from the seller's side. So when you see those items on there, you're going to see kind of a blurb that will say something about Y Green or California. What's it called? Anyway, it will say Y Green. It'll disclose that there is a solar item or an energy efficient item. Generally, the seller has signed something and they know that it's included in their tax bills, but somehow that kind of spaces them when they come to escrow. I'll say 50% of them don't realize because it's included in their tax bill that they actually signed it and it's not paid in full. So what happens, say we close an escrow during this time of year. So we are in January, the tax bills for this year, actually the fiscal year, have been generated. So the fiscal tax year runs from July 1st to June 30th. So we're well into this particular fiscal year. So what we'd have to do in order to close these loans and pay them in full is pay both installments. So in the event that you have a buyer who's getting an impound account, that's going to be a little bit difficult to explain unless they've dealt with it before. In order to pay these loans off, both tax bills have to be paid. So right now we could pay the second installment pretty easy. If we're closing, say in October, when tax bills are just being generated, we still have to pay both installments. So that sometimes is an issue for the buyer because they're not planning on paying the whole second installment for the next calendar year. So those particular items, if you see it on a preliminary title report, it's something that we would let you know right away. And we certainly would work with your lender as trying to explain it to them. So with a refinance, it's also the same. We still have to pay both installments through the escrow in order to pay those loans in full. So we get a payment, a payoff demand, just like we would for any other, say, mortgage or, lien judgment, whatever. And it would say, we'd have pay it in full, pay both installments. And then once the taxes get paid in full, the next calendar year, they will go, or fiscal year, they'll go ahead and reassess the tax bill and strip that old amount that got paid in full out of the sellers or out of the refinance from the previous tax year. So this is kind of confusing. Probably have to have it explained a couple of times. In the event that your buyer has an impound account, we're going to have to talk to your loan officer. We're going to have to talk to probably the lender to explain how the taxes have been changed based on that particular PACE loan, Y Green loan, Empower loan. So this is kind of a confusing little item. Does anyone have any questions before I move on?
I was just going to add that the taxes can go up a lot. I mean, it's a big change to the taxes when Y Green or someone like that pops it onto your tax bill.
And if you have questions, if you're concerned, you're not exactly sure if it's on there, you can look at your tax bill. There'll be a line item. It will say PACE. It will say Y Green. It will say Empower. And you'll know exactly how much has been added into the tax bill and how much will be taken away when that is paid in full. So unfortunately, it's not disclosed in great terms when the seller signs for that. It just sounds like a great deal because it's paid with the taxes. It is a great deal, but it still is something that's an issue once we get ready to close an escrow. Okay, no one else? Questions, comments?
There's a question in chat, Liz, that's about transferring the metering credits. I'm not sure if you know about that, given your personal experience when you're doing the buying and the selling. Does that happen at the close of escrow as well?
It actually doesn't happen at the close of escrow. It generally happens when they reconcile at the end of the year.
Okay, so they'll get like a refund check or something like that?
If there's a refund, if there's rarely a refund check.
Okay.
I thought that was the case that happened, but for the most part, you don't get a refund check. You just get a very small bill. But if that were to happen, if your particular solar company was fantastic and actually rebated you amounts during the year, they would actually prorate that when you finalized your final bill.
And then that would go to the seller, the bill, or would it go to the buyer?
It would actually depend on how you break it down with the solar company. Just like a homeowners association, if you close in the middle of a transaction, we would try and prorate it through the escrow.
Right.
But because we can't, because it's a separate entity, the solar company would have to be told to prorate it. So it definitely happens. It's just it's kind of a case by case basis.
So it's something to make your buyers aware of. This is a possible situation that may occur. So buyer beware.
So I would just say that when you're asking the seller and getting information about the solar for the past year, and you find out in the event that there has been a rebate, and ask how you received it. So if they got a rebate, that would be something that you'd want to talk about.
And then there's one other question in the chat simply about state-specific guidelines. Is that someone where they would just reach out to their local title company and title officer and ask them about any specifics state by state?
Yeah, I actually am not aware of other states that have this particular, Y Green and California PACE loans, but I imagine they do. I would check with the specific state or their escrow officer there and find out how it is dealt with. I mean, some of them have quarterly taxes, so it just depends on each state. Yeah.
Got it. Thank you very much.
I was also just going to add another important thing that Liz was mentioning was how important it is the buyers understand. So if you're a buyer's agent and you're showing a house and they have solar, it's important to ask the question of the listing agent, hey, how much is that payment on that solar system, right? Because that can make or break a deal, right? The buyers may not want to pay $200 for a solar lease. And I've had transactions where we go into contract and then we're a week or two in and the buyers figure out how much that payment's going to be on that loan they're taking out. And they're like, dude, I don't want that. And the whole thing falls apart. So asking those kinds of questions and preparing your buyers, listen, just so you know, we got a $150 a month payment for that solar equipment. We got to make sure you guys are okay with that. Otherwise, we end up wasting everybody's time. We go into contracts. Sometimes the buyer ends up spending money on an appraisal and inspections that they don't get back. And so it can be kind of heartbreaking. So important question to ask when there's solar is, can I get an idea of the payment? I want to prepare my buyers before we go into contract or anything like that.
Great. So I had mentioned solar easements, and in the event that you see a solar easement on the property that you're dealing with, generally the easement is just a right to receive sunlight. So you can't, there's some properties that they put an easement on, so you can't actually block your neighbor's sunlight. So it's pretty standard. It's not a big deal. If you see that, it's just protecting the interest of the solar. They sometimes have certain land use conditions agreed by the property owner involved. So your next door neighbor might have signed a solar agreement that they're not going to build a third story on their house, or they're not going to put a big structure next to you. So that agreement actually will go ahead and show dimensions of where you can build and not build. So even if you don't have solar on your property, your next door neighbor may have a solar easement for your property. So just know if you see that on there, that the solar easement, it's actual contractual, and it is something that you cannot build against. You can actually be sued for that. So restrictions are on vegetation, additional structures, building, some sort of gazebo next door that blocks the sunlight for your next door neighbor's solar. That's what that is if you see that. So that makes sense. It's pretty standard. It makes sense. But just so if you see it, it's basically for whoever has solar next door. So it's important that when they're recorded, they should be recorded. So if you have one that's recorded on a property that in question that you're working on, know that that particular information and the detailed dimensions of the easement are important to your buyer. So they may influence your landscape and things that they possibly want to build.
So Liz, there's another question in the chat from Kathy, who's asking about, she's in contract right now on a property that is in a short sale, and the solar panels and the payments for them are in collection. Mm-hmm. And the bank that owns the property or that is negotiating won't pay the solar panel deficiencies. They won't pay the collections. So it's becoming the responsibility of the buyer. Do you know if there's a way that, or just in your experience, that solar companies would settle on basis any amounts that are in arrears like that?
Back in the last short sale windfall that we had, we didn't have that many solar issues and solar products on people's houses. So I think it's probably as new to them as it is to us. I imagine that down the road, they're going to start to figure out a way or have a department that deals with that sort of thing. But I would imagine right now it's a case by case basis. And if the buyer agrees to pay it, they're going to say, oh yeah, let's do that. So I would have them circle back with the solar company before it's agreed upon.
Yeah, I would imagine that it's a matter of negotiation just
Mhm.
between the agents for both parties, right?
And yeah, and as I said, it's probably new for most solar companies. There weren't so many of them around during our last short sale
Right.
time frame, so they probably need to be schooled with that information.
There can also be the issue, and I don't know, maybe Doug can chime in on this as well. Some of these older solar companies that went out of business and now the servicing of them is being purchased by other companies, or they've been sold similar into ways that when banks went out of business, that their servicing was sold. You end up not really having anyone with whom to negotiate. You're in this really interesting bind. And there's a term that needs to be present in those contracts with regards to foreclosure that may not exist in a lot of these older contracts. And so for refinances, we need to get that form, that it's a Fannie Mae addition that needs to be added to that agreement when we're doing refis. And it may also exist when you're doing a purchase as well. I don't know if your experience is the same with that, Liz or Doug.
I was just going to add that, yeah, there's certain forms that a solar company has to have in place that are Fannie Mae forms that they need to kind of show that the company's functioning and all this other stuff. And I've had problems when it's a very small mom and pop shop and they don't understand the rules. And I've had my processing staff have to educate the solar company. Okay, this is what Fannie Mae requires. Can you get us these forms? This is what they're going to want to see. With your bigger companies, it's less of a problem because they do this so often. It's just there's departments they subordinate you down to. But the smaller solar companies, the smaller names tend to be a little more difficult because they don't understand as much of the process and the forms and the Fannie Mae guidelines we have to all abide by to make this work. So that's been my experience, is the smaller shops tend to be more time consuming and we have to do a lot more educating.
Probably has to be the case too with smaller mortgage companies and credit unions.
Yep.
Exactly.
And my experience with smaller escrow companies, separate, like in different places, like in LA, if they're smaller companies and such, they may not have a ton of experience with dealing with solar, although LA is usually they get a lot. But if you're in the Midwest or somewhere else where solar isn't prevalent, you may run into that kind of an issue.
Interesting. Great. Anyone else? All right, so back to what we've kind of all been circling about. Communication is the most important part when it comes to solar. So we want to make sure that you inform your escrow officer what's going on. The more information that you give us, the better we can do our job. So if it says specifically in the contract that the buyer is going to go ahead and assume the terms of the lease of the solar, we jump right onto that. We know exactly what to do. We just want to make sure that we know what your plan is for the solar, if it's being paid, if it's being assumed. That way we can do our job as quickly as possible. And if you have any questions, seriously, ask your escrow officer. If it's a question that is super title involved, we would just ask our title officer. We have all kinds of webs of information that we can get for you. Just ask the question. Okay, so we're going to move on from solar.
I'm going to plug in one more thing just for the loan officers on the call. Sorry, Liz.
Sure.
For those of you guys that are dealing with lenders that are back east and may have less experience in dealing with solar power, you may just want to make sure that you drive this to the underwriter and really kind of champion your cause, because they may not have a ton of experience with solar whatsoever, just because of where they are located geographically. We've done a lot of training for this with people that, especially at some of our bigger lenders, where we send a lot of our business now, and they've become much more aware of this kind of stuff, where we have the endorsements that we use that Liz mentioned, as well as supplements that we use. So these are things that you want to be aware of. And if you need further information, either Liz or your mentor should be able to help guide you here at PWM, is to help get these things done really well and without a whole lot of hiccups down the road. So just be aware.
Great. All right, so gosh, I'm having a little bit of sun issue. So I'm either really dark or really light. Sorry about that. Okay, so we're going to talk about preliminary title reports now, and I'm going to go ahead and pull up that particular presentation. So when you see it, let me know that you see it. Where are we here? Oh, there you go. All right, we all good to see my presentation? Gosh, for as old as I am, I'm getting really technologically good. All right, so we're going to talk about preliminary title reports. I would say that when people get preliminary title reports, their response is either to ignore it, send it on to their processor or transaction coordinator, or read it as they should. So this particular preliminary title report is pretty detailed. I will say that Fidelity National Title and our affiliates have a new particular prelim. It's called Live Look. That is the Cliffs Notes version of a prelim. So if you are interested in that particular feature, ask your sales rep or your escrow officer. That way it tells you exactly what you should look for if there's any issues, if they're solar. But we're going to talk about the prelim so that you understand what the guts are. So preliminary title report is an offer to issue title insurance. It's not saying that this is an insurance policy. We're not saying everything that's on here is set in stone. We are offering it as a preliminary information on the property that you're interested in. So if you're interested in selling, buying, or refinancing, this is information that we've pulled that is of public record on the property in question. So when the prelim should the prelim be ordered? Well, if you think that there's something on the property that we need to have additional time to deal with, like solar, or say someone has passed away, then you'd want to order the prelim right away. We can do what's called a pre-start listing, or open it before you have a buyer. That way you can go ahead and see what the condition of the title report is. So that way you know exactly what's on the prelim that you have to deal with. So if you have a seller that doesn't really know exactly everything that's on the property, so maybe their husband dealt with all of their financial stuff, you can get that prelim as soon as you list the property, so you know everything that's on the prelim and that you have to deal with. So we issue a preliminary title solely to facilitate the title insurance that we're going to issue when we close the escrow. So until we close the escrow, there's nothing that we're insuring. We generate the preliminary title report when you request it. So say you go into contract and you send us the contract, we open it then. If you specifically open escrow, we start the process of generating the preliminary title report. It's generally available for viewing within a couple of days. If it, however, is a property that hasn't had any title work done in a while, so say it's my mom's house who hasn't done anything on her property in 40 years, meaning refinance or add anything, it will take longer because the property hasn't been searched in a long time. So if it's something that they just refinanced, 2 months ago, you're going to get the preliminary title report really quickly. Okay, so preliminary title report. The preliminary title report shows all the items that are recorded against a property. So it's what's called of public record. The first page of our preliminary title report is going to say pretty much specifically what every other first page of every title report says. And it's saying that this is a preliminary title report only. It is solely for informational purposes, and it does not insure anything. So it's just saying this is a preliminary title report. Once we close the transaction, again, we'll issue our title policy. So specifically on a preliminary title report, you have lots of information on the first page. With our computers, we can find any escrow pretty much anywhere in our system located in our general area. So you don't have to know your escrow number every single time, but it will show on your prelim the escrow officer, your title officer, escrow number, and then the first part of it is going to say who requested the prelim. So right there, it's the listing officer, and then it's going to show the property address. So I would say that the property address is something that can have human error involved. So if you get your preliminary title report and the property address is wrong, please let us know right away. The next item, and this is super important, is the effective date. So every county has a different date that we can pull from. The effective date is when we can actually search public record and find what has been recorded. So say in Sacramento County, we would probably, if we got a preliminary title report today, our effective date would be sometime last week. So they actually upload everything with, pretty quickly, but they're still several days behind. So when we go to close the escrow, we do what's called a date down to make sure nothing else recorded on the property. The next item on a prelim is going to show what type of title policy we're going to issue. So if you have a sale transaction, you're going to see an owner's policy, either the Alta homeowners or CLTA homeowners. And if you have a loan involved, it will also say there's a concurrent Alta loan policy. The next item on a prelim is going to show what type of ownership that there is. Most of the time in California, you're going to say fee, which means that the property in question actually is including the land underneath. If you're buying a piece of property in Hawaii, it would say leasehold because you don't get to buy the property underneath the dwelling. I'm going to skip that because we don't ever need to look at that particular number anymore. We don't need to know that. It's just information, it's not necessary. Then the next particular item would probably be the second item I look for in any prelim after the address is to see who my owner is. So if I get a contract and I have a couple of owners that are on title and there's only one owner that signed the contract, I'm going to want to know what happened to the other owners. So when I get that vesting information, I'm going to want to compare it to anything that I have with, say, the borrower's information, as if it's a refi, or the seller's information. So I'm going to look at my contract to make sure that I have my sellers correct. The next item is going to show it's that we're acknowledging a legal description, which in California, we actually are ensuring a legal description, not the property address. So a legal description is really important. In this particular case, this legal description is for a subdivision lot. So it's a very easy legal description. It says lot, 123 in Sunnyside Acres, super short legal description. I actually live in Placerville, California, and I live on 5 acres. So my legal description is a page and a half. And so depending on the type of property that you are dealing with, it might be in your best interest to get what we call a color-coded map that would detail with basically showing you on color-coded information where the easements are and where the actual legal description takes the property in question. If you see mineral rights that are on your legal description, they are an exception, so we're not insuring that, and that actually doesn't run with your property in most cases in California. So the guts of the prelim, the guts show any items that we need to take care of in escrow through a transaction. So I will say taxes are always first. You always have to worry about your taxes first before you pay anything else on a property. So currently we're showing that there's taxes that are outstanding. The second installment is still outstanding. And on the tax bill, when you see tax bills on your property, it will show you what the valuation of a property is. So if you're selling, or if you have a buyer who's interested in the property, you can kind of look and see what the seller's old tax rate was and have an idea of what the supplemental bill might run. So we're always going to pay taxes. They're always going to show on a prelim first, and then we're going to show defaulted taxes or supplemental taxes if they are applicable. So defaulted taxes means that the seller didn't pay taxes timely. So every month that goes on, there's a penalty that gets attached. So we do make sure that gets paid in full. This particular property does have defaulted taxes. The next item has to do with taxes as well. It's a tax called MLOs. It's added into taxes. It's agreed upon by the initial subdivision builder what amount of taxes need to be added into the property to basically make it a neighborhood. So streetlights and sidewalks and schools. So it can be really, really a hefty price. So if you see MLOs on property, you want to see how much it is annually. And then there's actually on the tax bill, you can actually call the number that's located next to your MLOs amount and find how long your MLOs might run for. Sometimes they actually do go away, but they are added into the general tax bill, and they sometimes are pretty hefty and can change the amount of taxes that you have to pay. So it's important that you know for your buyer. Talk about supplemental taxes if they're outstanding, and then we go on to easements. So easements are rights of way for someone else to cross your property. So in this case, these are easements for public utilities, and for the most part, they always detail where they are applicable on your property in question. The next item are CC&Rs. So covenants and conditions and restrictions are determined by the initial subdivision builder to detail what they think are common sense items to be on the property. So I would say in areas recently where they're building them newly, most CC&Rs are 300 to 500 pages long. If you were looking at a piece of property in Sacramento that was built in the 20s or 30s, they're 1 page long. So it's interesting that people have really changed the idea of parameters on a property. At any rate, they're public record. If you want to see a copy of them before you even get your prelim, it's easy for us to send you a copy. Oops. So before we finish with the CC&Rs, there's another item that sometimes rolls along with covenants, conditions, and restrictions, and that's a homeowners association. So it would say on the preliminary title report whether there was a homeowners association. And so for a sale transaction, we do have to get documents to the buyer, and we also have to make sure that the dues are current, that we pay the transfer fee, and that we comply with the terms that the homeowners association wants. So a copy of the grant deed often. So we do have to pay anything that's outstanding for a homeowners association as well. Then on the prelim, we have a deed of trust. So this particular deed of trust shows that it's in default. So that means that the seller skipped several payments, 3 payments in a row at least, and they can file that notice. And then it also shows on the preliminary title report what the amount was when they recorded the deed of trust. So when you see it on a property, know that's what was recorded back when they recorded it. That's not what is outstanding currently. So we do need to pay that through the transaction. So when you see that, know that that deed of trust must be paid. The next item is an abstract of judgment. So that's a particular item that went through the court system, and it was agreed that had to be paid by the owner, who's the debtor. So we do have to get a demand on that and pay that through the escrow, make sure we get a release on it. So sometimes that's a little bit hard to get in a timely fashion. We may ask your seller for help on that. The next item is not actually showing on the prelim. This prelim was the prelim presentation that has been approved by Fidelity is a little bit outdated. I did want you to know that if you were to see solar on the property, it would be right about here, and it would show, if there was a contract, it would show this verbiage. I have Solar City on here as an estimate or as just a name, but it would show that there's a contract on there, and it would disclose by the independent solar energy system producer contract. So it'll say contract in the line item, and that would, for a sale, we'd have to deal with that as far as if the seller was paying it, if the buyer was assuming it, what we were doing with it. And for the most part, you'll see a UCC filed right after that. Next, what you'd see on there on the prelim would be a court order. So for the most part, court orders have to do with child support. If you see a child support lien on your preliminary title report, it doesn't necessarily mean that your seller is a deadbeat dad, deadbeat mom. It just means it was recorded by the county of record to make sure the child support was paid monthly. So we order a request. We generally get a 0 demand and a release so we can record with our transaction. Actually, in this office, we just got a demand for someone who hadn't paid it all, and it was $112,000. So sometimes it can be a little bit hefty. So, but you'll probably know if that's the case. The next item on here is a tax lien. So tax liens also have to be paid in full through any transaction. This is the IRS. The IRS requires a specific form to be signed authorizing us to get information. So know that if you see that on there, we'll be sending you that form for your seller to sign with a live signature, not DocuSign. And then we have a mechanics lien. So mechanics liens mean that on the property, someone did some work and they were not paid. So they went and filed a mechanics lien to make sure if anything happened on the property, they did get paid. And then we're going to talk about statements of information. So if you see a statement of information on your preliminary title report, most of the time it's for the seller, but if the buyer has a tax lien, we're going to want to make sure that that's not an issue. But if you see a statement of information and your seller has a common name, so say your seller's John Smith or Juan Gonzalez, if you see that there's a statement of information request, it's probably because it's just a common name. So for title insurance purposes, we want to make sure that we verify the seller didn't have any liens or judgments that we weren't able to find easily. So we get that statement of information and we're able to clear them. But if your seller is, say, John Jacob Jingleheimer Schmidt, and we request a statement of information, chances are pretty good that we have a lien against him. So if you see that, just know we were going to want to make sure we can run it right away and get the information so we can order a demand. And then we're going to have some notes after we have that information. So notes are pretty common. We're going to have a chain of title. So the chain of title will show if there's any deeds recorded in the last 2 years. So in this case, there were. So we'll show that on the prelim. And we show that just to make sure that the lender, final lender, knows whether or not there's any flipping issue or investor issue. And then we're going to talk about the property, we're going to give an address supplement saying what the actual address is currently. And then we are not going to ever show the wiring information anymore. So as I said, this is an older prelim presentation. And so you'll never see wiring instructions on our prelim again. And then we're going to show you the plat map. So when you get your preliminary title report, you're going to want to make sure that you take a look at the description and make sure that it is the actual property in question on the map. So we do always have an arrow and a little note says PIQ, which is property in question. And in this case, we're pointing to the property and you would confirm that that's the actual correct property for the seller and that the buyer is actually planning on purchasing. And so you can actually look at the book and page information to determine based on the parcel number that it's the correct property. Make sure that your seller has seen it. We're selling the right piece of property. So do we have any questions on prelims? Are we all awake? Do I need to tell a joke?
I had a question because so sometimes, you know, the prelim will come back, and this has happened in my career, and the escrow house will be like, man, there's like 4 mechanics liens on the property. And then I'm talking to the bar and they're like, what are you talking about? I've never heard of that. And then like a week later, title's like, oh, no, we cleared them all. So is there some, can you go into why sometimes stuff pops up on a prelim, we all get nervous, and then it just kind of goes away?
I can say sometimes it's human error. So we do sometimes have human error. Sometimes we get a little bit more information about the seller or the property, and we're able to run it again and be able to determine that information that wasn't recorded perfectly as far as the releases, the perfect information wasn't, but we can take a look and discern that that was actually the release. It just didn't have the right book and page or the right recording information for the release. I will say that sometimes, because we are cleaning up all old deeds of trust, you might see something that looks like an old deed of trust that you know was paid. It will say underneath that we believe this was paid. We just want to determine that there's a release being recorded. So we're going to take care of that on our end. Might ask for some information from your borrower or your seller to make sure that we can get it taken care of. But back, 20 years ago, refis were closing so fast, and the old lender, the old mortgage company, was sending the release to the owner, so they didn't always get released. So we are going back and cleaning that up. Yeah.
When you were speaking earlier, a few pages back, when you were saying they have to have a live signature now, does that mean they have to physically be in the title office to do a wet signature, or can they do it like a video?
They can actually print the form and do a live signature. What I mean, for the IRS tax form, they don't want the actual DocuSign. So they could print the form, scan it back to us. Yeah.
Okay,
that's what I meant by live
perfect.
signature. Yeah, not DocuSign. Yeah.
Like a wet
Some of these
signature.
older prelims.
Wet signature. Yes.
Sorry, some of these older prelims are really interesting to look at too, especially the ones like your mom's house over 40 years. She hasn't done anything on it, right?
Yeah.
Some of the properties up in the gold country, right, with the originals, they've got like when they would lay claim, right, to property, and excuse me, they would exclude certain people, and there's all kinds of disclaimers that have to go on those really old ones, but they're really interesting to look at.
Mm-hmm. Yeah, cattle drive information for easements, that's on some pieces of property. Yeah, it is kind of interesting, and some old CC&Rs are pretty interesting if you read them, just for the information that's on there. CC&Rs back in the 1920s really did have some discriminatory language in there. So on every one of those CC&Rs, even if it's a current one, we do put a disclaimer on there that if there's anything that is discriminatory in any way, we consider it to be illegal and not, it cannot be enforced. No, actually, someone just asked if any additions that required a permit, will that show up on the report? Permits are not public record. So unless someone recorded something with that permit information, it will not be something that's of record. So you'd actually have to go to the building department if you had questions about permits. Anybody else? Oh, sure.
Liz, that brings up one more question. I'm sorry.
Sure.
Oftentimes, when someone has done an addition, it may or may not change the zoning on that property. And you may not even be aware, as the title company, you're pulling public record that, you just get the information that you get.
Right.
How does one go about correcting that or getting you the proper information so that the pre reflects the zoning of what the property actually is now?
So if they change the zoning, or if they added on, say, an addition that after the fact, after it was built, they would actually have to go to the assessor's office to show the information for the say the 400 square feet that they added to the property, to make that on the county website, or they would have to go to the assessor and change that particular zoning to make sure that it pulls up correctly. So all the information that we pull as far as the size or whatever, that's from the assessor's office and the zoning. So that actually, you have to go in or call and make sure that they actually manually update that.
And does something like doing an ADU, does that change something to like a duplex, or does that need a different gas meter, a different address?
It depends on how they record it. So if they went ahead and changed, if they went to, because you can actually change the property address to say duplex, and you can actually add the other unit on there. You have to do that with the assessor in order for it to pull correctly for us.
Right. And that makes a huge difference for us in
Yes.
terms of lending, because it
Mhm.
changes the loan limit dramatically.
Exactly. Yeah, I've had transactions where it only pulls a single family dwelling, and yet they changed it to a duplex 10 years ago, but they didn't change it all the way through the assessor, so it doesn't pull for us.
Or we get borrowers who say, no, my garage, I converted it. It's a separate unit now, but it's not. I mean, it
Right.
may be in physical, but it's not necessarily recorded that way, and it's still an SFR.
Right. You can actually look on the assessor. The assessor has a great website. You can tell exactly by year what they changed on there. So you can tell before you do anything whether they actually changed it with the assessor and it's accurate or not. So
Really appreciate all this information. It's very helpful for all of our LOs. I can tell you that much for sure. And obviously we got a huge following here today. We got 70 people on this broadcast as well as the GoTo meeting. So really do appreciate both you and Jason.
thanks so much. Thanks for your great questions too.
Yeah, and honestly, guys, the common theme that I think Liz is constantly bringing up is the importance of being thorough upfront, right? Being thoroughly reading through your preliminary title reports, thoroughly looking into the solar situation and doing your research so that when we go into contract, we do it right from the get-go. So Jason, Scott, I appreciate you setting this up with Liz. Liz, we of course appreciate your time and the expertise you bring to the table. Guys, we appreciate you coming today. I hope you guys found this beneficial. And we hope everyone has a great week. Thanks, everybody.
Thanks so much.
Thank you.
Thanks, Doug.
Good opportunity, Doug.
Thanks, guys.
Thank you.
Thanks, Doug.
See you guys.